When I started preparing for CFA level 1, the very first concept which felt very interesting was the concept of depreciation and amortization. Now, if you have some kind of a memory of your class 9 and 10 of the chapter applications of compound interest, now you would remember the concept of depreciation. And there's a way to say that depreciation is just the wear and tear of the machinery, and that is how we solve all the questions of depreciation in class 9 and 10. But when you start reading the financial statements, or rather when you're preparing for CFA level 1 or 2 or 3, then you will have to understand that depreciation has a very different kind of a meaning when you are talking about financial health or financial status or financial statements of a company. So what exactly is the idea of depreciation? So in economics, you must know that for every profit, every accounting profit, you have to have an opportunity cost, and that accounting profit minus opportunity cost will give you the economic profit. So similarly, to get the accounting profit, every revenue, every business revenue has a business expense. So you get the accounting profit in a financial statement after deducting the business expenses from your business revenue. So it goes on to say that, let's say you have bought some kind of a machinery and the life of that machine is 20 years, and you have paid maybe, let's say, 20 lakhs for that, and as we're expecting the machine to last only 20 years, so a sane way to calculate depreciation would be 1 lakh per year. Now obviously this is a very simplified way to talk about depreciation, but I hope you get the idea here. Now what the idea here is that every year you will incur a depreciation of 1 lakh for that machine, and it is like an expense, a business expense, because that machine is generating a business revenue. So it must be having some kind of a business expense, because you cannot get revenue out of no expense. You have to incur some kind of expense for every revenue. So that depreciation is the business expense, right? And as you have the life as 20 years, that is why you will have the depreciation lasting for the 20 years. Now this is a simplification which I am trying to tell you, because depreciation has multiple methods of calculation. Now I won't be getting into the calculation methods of depreciation, but I just wanted to drive down this concept that depreciation is not just the wear and tear of machines and machinery, but it's kind of like a business expense to the business revenue, right? And what is the idea of amortization then? Now amortization could be construed in two ways, and the thing which we are talking in this video is mainly the asset amortization. Depreciation is concerned with the physical assets like machines, plants, and any kind of thing which you use and has some kind of a physical usage, and you can see them, you can touch them, basically your tangible assets. Now what about intangible assets? Those intangible assets must also have some kind of a life, because nothing is for eternity. So if you are trying to incur some kind of a revenue out of those intangible assets, you'll also have to incur business expense of those intangible assets. So the way to calculate the cost or the business expense for those intangible assets is your amortization. So amortization could be for something like you have bought some kind of a license, you have bought some kind of a trademark, some kind of a patent. I mean, don't try to get into the examples which I am saying. Just try to understand that this is something which is not like a machine which you can touch and feel. It is something which is like an idea or a concept or a kind of a trust, right? So the difference lies in the tangible intangible nature. So when you have a tangible asset like a machine, you have a depreciation which is just a business expense for revenue. And for intangible assets, the same analysis, and we name it as amortization. Now there are various ways to calculate the depreciation and amortization, we won't be talking about those things in this video, but if you are interested, then you can just Google it up and understand how to calculate depreciation amortization for various kinds of assets. Now in future I may make such videos also, so if you're interested in that kind of a video, do comment below. And how do you use this depreciation and amortization? Now we use this depreciation and amortization mainly in our income statement, and in the next set of videos I will talk more about few other ideas about income statement. But do remember that you have depreciation and amortization, or D&A, as something like an item in your income statement, and that has to be deducted from your revenue, right? Because that is a kind of a business expense.